So, everyone, this is Andrew Berman. Thank you for joining us for another Mortgage Leadership Outlook, where we go live every Wednesday with some of the greatest minds in the mortgage industry. So this is something actually we started back last year. Last year, it's almost like it was like a way to kind of find answers in the unexplainable things that we were facing in our industry from the pandemic, and it's matured. It's grown actually past that, and now actually we're just meeting with the greatest leaders. And today, I am so excited to bring to you Bruno Pasceri, who is the president over at Incenter. Bruno, thank you so much for joining us today.
Oh, thank you. My pleasure.
So listen, there's a lot I want to ask you. Culture is so important in your world, and we're going to talk about that. I want to talk about a couple of there's a lot of different things I want to talk about your kind of your way of thinking. But let's first start about how did Bruno get into the mortgage business? Take us actually back to how you, because I'm assuming you went to school to be a mortgage professional, right?
No, not really, no. Yeah, I always say that no one actually goes to the school and thinks, hey, I want to be a mortgage guy. But I'm a lot older than most people here. So what happened was during the S&L crisis, the bank that I was working for in accounting and doing loan workouts for construction guys and loan projects got taken over by the RTC. So the RTC offered me a 1-year contract to do workouts for them, and I needed a job, so I took it. And during that, I was a young guy then, and I learned that you need mortgages to do the takeouts for these workouts, and I had no idea what that meant. So I met with a local mortgage person and start working these projects out and doing workouts. When the contract was over, the mortgage guy asked me if I wanted the job. And, unfortunately, he told me it was 100% commission. And that was a tough one for me to swallow. So he told me that I could do the accounting and do my loan officer work at night, and I could ease into the 100% commission. So that's kind of how I got in it. And, of course, never got out.
So, and how old were you at the time? So here you're presented this opportunity where you're not even sure actually what exactly a mortgage is, but actually, you need to do it. So how old were you at the time?
I was in my mid-20s, probably around 26, 27 years old.
Okay. And I mean, kids, married at the time. What is the Bruno situation at that time?
I had two little kids at the time.
Okay, so going 100% commissions probably would have been scary. Is that and have you done any sales before that?
No, not really. No.
Was it?
I took the accounting job because I knew I would have an income, and as all things go, when you're doing accounting and you're writing the commission checks, I thought I could do that and make that kind of money because they were making 10 times what I was making as an accountant. So I gradually got into it. It took about 2 years before I was actually full-time sales.
Interesting. So, and when did it hit you? When did you actually feel like connected to the mortgage business and just like start to have a sense like, hey, I love this. I think I might have found my calling.
Yeah, it was probably a good 5 to 8 years after starting in it. Where I started to pick up some momentum. It took a few years to grab, a set following, to where I had certain builders and certain realtors who used me all the time. It took quite a while, but I think the reality was once I moved up out of sales into a branch manager and then a regional manager, I felt a lot more connected to what was going on in all parts of the business.
So now, do you feel actually that today, it's harder or easier to do to originate? Like if you were presented with the same situation and you had to create a book of business from scratch today as an originator, do you feel it would be harder or easier?
The interesting answer would be both, right? I think it would be overall harder just because of a lot of things in the industry, shortage of inventory, a lot of things that are going on in today's world. I think technology certainly has made it easier. I was handwriting 1003s or like the guys who work for me say, I was chiseling them on stone. We know the stories. There were no cell phones when I started. We had used carbon paper. I mean, there were a lot of things that made it a lot harder. But I think getting business today is harder. I think the actual doing of the business, it was easier to get business back then, harder to actually do it. I think it's easier today to do it, but harder to get the business. So I think it's kind of an interesting dynamic of the reverse of what happened from when I started.
Interesting. So processing the loan, doing the loan, not having to handwrite the 1003s, that's going to be easier. So you could potentially do more loans, but it's getting actually the loans in the door is the thing actually that becomes more difficult. Now, do you think actually, do you think there's a good opportunity for a younger generation of people to come into the mortgage business? I mean, we're facing actually, I mean, if you think about it as an industry, we pretty much, like we're aging out. Like, there's not, there's new blood coming in, but how do we excite new entrants into the origination space?
I think the challenge that we have in doing that is one of the things that we've done very poorly in our industry forever is train our people. The typical thing was, come in, here's your business card. This is what we do. I'll see you later. Go hunt.
Yeah.
And of course, a lot of people failed based on that. And, we don't do a good enough job of training them and then putting them with a mentor, having that mentor grow them for a year or two. We've had a very difficult time doing that. And I think that's where we need to improve the industry. I think the other real challenge for us is bringing young people in the game is that most of the people who you would bring in now, college graduates now, either fortunately or unfortunately, were in junior high and high school when the meltdown happened. And they watched on TV every night somebody telling them that mortgage guys were devils. And then tell them it's 100% commission. We have some PR to overcome that. We need some things to do to change that. I think there are a few guys out there, some of them I know very well, who have started like mini universities within their mortgage company, a mortgage university, which makes sense to me. We need to train them. We need to pay them, even if it's minimum wage. We need to give them a salary. We need to train them. We need to then place them into one of our branches with a mentor to help them get through those first 2 or 3 years. They're the toughest ones. And I think that we're not doing that. There's a few guys doing it, but we're just not doing it as an industry. So I think that would be a change that I would subscribe to.
So what would you suggest a new loan officer that they just got licensed, they have those first 2 to 3 years to be able to establish themselves. Hopefully they're getting, like I said, some kind of compensation, maybe like a minimum wage, so they can at least, where it's not costing them money to just live. Like, what other suggestions would you give those new loan officers to get started in the business?
I think, interestingly enough, I think we have to go back to sales 101. And I think we're missing that. That's the other thing we're missing in our industry, showing up at the realtor's office. Unfortunately, we're still a bagels and donuts business. So showing up, staying in contact with them constantly. We've lost the idea that when we get a commitment on a loan, that's the most important thing a realtor needs for their transaction. So we need to hand deliver that. We need to fax that. Now, this is for newbies. We're not going to do that with somebody who's producing $100 million a year in business. That's just impossible. But for the new young person entering the game, that would set them apart from everyone else. The idea that, you don't have fax machines anymore. That was one of the tricks I used to use. Send a fax and say another commitment from Bruno Pasceri. Wow, another commitment. Might have been the first one I ever did for that office, but it was another one, So there are a lot of little tricks that you can't use today because the technology has advanced so much that those little tricks don't work. But I think being present, being in there, hand delivering that commitment immediately when you get it, and supporting the real estate community. I see very few loan officers show up at the realtor meetings anymore, the luncheon meetings they have, show up at the realtor monthly functions, the builder functions. I see very few people doing that. And for the newbie in the industry, someone needs to help him to say, hey, you need to do these things. Once you're established, and then maybe you don't have to do it every week or every month. But and then also to set their expectations that you only need 8 good realtors to sustain a business and make a fairly decent living. The problem is most of the young guys go after realtors who don't do any business. Because there's only about 20% of the entire real estate community that actually do business and make a living at real estate. So it's identifying the ones who are actually doing business in your region and allocating your time to those realtors, not the ones who are doing no business that waste your time with lunch and all the things that they do. So someone needs to mentor them and shoot them in that direction.
Yeah, the unfortunate thing is the 80% that aren't doing the business are the ones that say, "Yeah, I'll have one of them jelly donuts."
Right.
And that's the only the problem that we do see. So interesting. So I want to shift gears a little bit because I also believe, I mean, obviously you're talking about some tactics and things you can do, but I think it's also important about the company that's supporting you, and from an origination perspective. And I want to talk about organizations because one of the things that I've learned actually from having some conversations about you, Bruno, I was doing a little bit of research about you. It's culture is something that seems to be like a constant with a lot of your communications, whether it's things actually that that's being done proactively by the organization, or just things that go on kind of almost behind the scene, like almost adding to a culture bank. Talk to us about the importance of culture and what exactly culture means to you.
So there's a lot of interesting, management books you read over your years. And, one of the things I read once was that culture isn't one thing in your company. It's the only thing in your company, right? So, your employee satisfaction, you can almost accomplish anything if they're on the mission with you. If they're not on the mission with you, it's tough. I used to tell a long time ago, one of our owners, he was a big, huge developer, had all these heavy cranes and everything. And once in a while, we'd get into a little, disagreement. And I would tell him, well, why don't you come over and see if you can move the office building? And he would ask me what I was talking about. And I'd say, I can move the building. Let's see if you can move it. And that's what I believe. If you have a culture that is employee-centric, where the employees are on the mission with you, that you respect them and they want to do well. They want to advance the organization. I don't know how you could do it otherwise. I'm just not made up that way. I don't know how that would happen. It's something that's really important to me. And I think if you look at most successful organizations, they've had a great culture. It might be different than what I view a culture, but they've had a great culture. And I don't think you can succeed without that.
So can you give me examples? Tell me exactly what is something that someone, actually one of your employees would say or recognize as proof of this strong culture that Incenter has.
So I think there's a couple things, from the leadership of Incenters, where we sit at the leadership level. We have our meetings, and they're no stripes off meetings, I call them. So when, in the military has these all the time, we're in the room, there are no colonels, there are no generals in the room. Bruno's not the president. The door's closed, and we can bang it out, and we can say whatever we want in that meeting with no fear of repercussion, as long as we're trying to improve Incenter. If that's the true spirit of why you're either arguing or bringing up something, then I'm okay with that. You can tell me whatever you want to tell me, whether respectful or disrespectful. When we open the door and leave, then there's some respect that has to go based on our organizational chart. But I think we've accomplished so much behind those closed doors that everybody feels like they have input. That's just one of the things. And then that trickles down into each of those leaders bringing it to their organizations. And I also believe that, again, the employee satisfaction, they know that you care about them, we truly care about them. Know that if something were to happen, I always say this, if something happens to one of your employees, if you're the company not the first one there to help them, then you really don't have a culture or a family. It's not a family then. Because if something happened to your brother or your sister, you'd be the first one there. So we need to do that and show them that we care about them. The pandemic for us, was something, the whole world was suffering. We had to step up and help our employees. And we did several times during it. There was a lot of things that they needed, a lot of things that were happening in the world that they couldn't get, shortages on this, shortages on that. We tried to step up and take care of that, including in our employees in the Philippines, which was really hard for them there. So I think that's what it is. The message is you are important. You're the most important thing to us. From the sales guys, I tell them all the time, by the way, you wouldn't receive your commission check if they didn't do what they do. So, and vice versa, of course, the ops people wouldn't receive their paycheck if the sales guy didn't do what he does, right? So there has to be a common respect. And I think that's what we've built in Incenter. I have an amazing group of leaders. The employees are fantastic. I mean, we just have a great group, and I'm really excited about it.
This is a unsolicited testimony from TJ Harrington. As one of Bruno's employees, I can tell you exactly how our meetings go. We get so much done because of it. So, and it almost seems like, to TJ's point and to your point, it's like you're creating ownership. You're creating actually like where the employees feel like they're owning a piece of the company or this this movement. Maybe not necessarily shares, but the greater good that you guys are trying to do. They feel like they're part of it. That's what it seems like.
Yeah, the other thing that's I look at it as important when you look at us. Like our goal or mission is, if you have a pain in the mortgage business, Incenter has something that can ease that pain for you. Whether it's title, whether it's appraisal, whether it's your REO work, whatever your pain point is, Incenter has a company that we can fit in and help you with that pain. And what that does for our guys is they take ownership of that, and you'll see technologies that are coming out that we're getting ready to introduce that have all come from a simple half-hour part of our meeting where we do the craziest ideas you can imagine in your brain, right? Now, 99% of those get thrown in the trash.
Yeah.
But that 1% that doesn't can change who we are and change the industry, right? And we have a couple of them right now that are really doing that. And so I think you're right. They take ownership in that. They're so excited about it, and they're so they're just quality human beings that they would want to do that, right? And I guess for me, you asked about the employees. So for me, people will probably tell you this, I've turned away branches, I've turned away loan officers in my day, and salespeople at Incenter in my day, that if you're not a good human being, you're not putting our name on your shirt, because that will destroy the culture faster than anything. And so, our business, we can teach you what we do, but I can't teach you how to be a good human being. So I think if you walk around Incenter, you'll see an enormous amount of great human beings.
All right. Now, so there's two things I want to cover. First off, and I'm going to save this for after my. So I want to ask about the pain points and specifically about like how we move friction from the mortgage process. But before you answer that, I gotta. So you talked a little bit about almost like family being involved. Talk to us a little bit about some of the things that you've done to kind of involve family. Beyond just the employee.
I'm not sure I understand.
So, it just happens to be I was watching actually some of the things that you've done, listening to the podcast, and it seems that that it's not just the employee that they want them to feel part of it, but also their family. And and which is sometimes difficult because listen, we're working crazy hours, especially with this year and last year. So how do you actually create like an environment that recognizes the individual's outside family, allows them to have that work-life
Yeah.
balance that we're trying to achieve?
Yeah, I got to tell you, I'm still working through those ideas in the COVID world. It was much easier, obviously, when we were all together in a corporate office. Um, and in the corporate office, it's really easy. There were a lot of things that we did that were so easy to accomplish that. You know, number one, what we're doing in center or in the mortgage industry, wherever we're doing it, it's not that important, right? We're not curing cancer. Let's face it. So, what we are doing is earning a living to do what is important to us, which is our families. And I've always preached that to them that, if your son has a T-ball game, see you later. You better get out of here because we'll be here tomorrow. You won't get to see that T-ball game ever again the rest of your life. So they're just things that I strongly believe in, of, people not missing that, right? When I took over my first CEO job, in the mortgage industry back then, of course it was, the holiday party was like, whoa, everybody out, drinking, hooting and hollering and doing all the stuff. And that's just not me, right? I don't really drink, so it's not me. So I decided we were going to do a party for our families in our corporate office building, for our kids, our grandkids, for whatever. And I thought they were going to string me up. But once we did it, everybody understood how important it was. That party went on for 19 years until I left that environment. I went into Incenter, and the interesting thing was when these little guys were really tiny little guys, and now they're all college graduates, and they're all, and they're still asking my youngest daughter, who's attended since she was born, couldn't believe we weren't going to go to any more of them, and she's in college. So that's how important that one day was to bring all the families together. And I thought, wouldn't it be great if your son could walk up to your office and see that you have his picture on your desk? He'd remember that for life, that my dad has my picture on your desk. So that was kind of some of the ideas. That was easier in a non-COVID world. I'm still trying to figure out how we can possibly do that in a COVID world. So
I appreciate you being candid about that. So let's talk about the pain that mortgage bankers feel, mortgage lenders feel right now. What do you feel like are the biggest pain points, and how do you guys try to address those pain points?
So the first one I could really point out, and I can tell you our solution is appraisals. Okay. And in 2020 and even now today, appraisals are 3 to 4 weeks out by the time from when you order them. That really slows the entire process down. Because what happens is we're underwriting the loan, then the appraisal comes in, I got to pull that jacket again, open it up, put the appraiser, and they have to underwrite the appraisal, right? So that's a real pain point, I think. What we've done to resolve that is we've come up with technology, and the technology is called remote valve. And basically what happens is the appraiser doesn't have to get in his car and drive to your house. Okay, so we're going to do that all virtual. And that appraisal could technically be done in 24 hours, and we can deliver it to you. The appraiser can actually do between 10 and 15 appointments a day versus 4.
Wow.
So it speeds the entire process up. I think that's going to be a big change for the industry. We're waiting on Fannie and Freddie approval right now. We just received the rating agency's approvals earlier in the week, which we're excited about, but we still need Fannie and Freddie. And we're working really hard with the agencies to get that done. But we think that's a real change point for the mortgage industry.
So are these one of those ideas that came in those closed door meetings, but where everyone's able to share and just just speak at a level playing field with all other employees?
It was interesting. It came through one of our other channels, not our appraisal company. It came through our title company, and the president of our title company had met someone who was doing virtual inspections for insurance companies and things like that, home inspections. Yeah. And he saw the technology and thought, oh, a light beam went off. Hey, I could do that in the appraisal. So the next time we met as a leadership team, he introduced that, and next thing you know, we hired a gentleman, Mark, and they both together have put this together, and I guess it's over 14 months later, we're here and ready to go. So it was an interesting collaboration, but it came in an idea that he just happened to see this software and thought we could do more with that software. So.
Wow. That's amazing. So, and I'm just wondering. So we have the appraisal. Obviously, that's a big piece. Of course, actually, if we have appraisal waiver, which hopefully maybe we'll see more of those. But what are some other pain points that mortgage lenders face right now?
It's interesting to me that I hear all the time, and people. As a matter of fact, I read it in an article this morning. How can we get to the 10-day close? And my question back to that question is always, why do I want to get to a 10-day close? If we're in a purchase market, I have to close when the realtor tells me to close. So whether you're ready to close in 10 days or not makes no difference. In a refi world, it makes all the difference in the world. The faster the close, the less they have to stop you, it makes a big difference. In the purchase world, it makes no difference whatsoever. The key thing in the purchase market is you need to give them that commitment immediately. So that's what we need to solve for. How can I give them that commitment faster than we're doing today, right? And that's really, and I was one of these guys. I was a loan officer. You need to submit a correct, perfect package in order to get that commitment done immediately, right? We need to use technology for processing that immediately and quickly and giving that commitment as fast as we possibly can. So to me, that's the real key to how we speed this process up. The other thing is we're in a system that all along we've been told, and I've been in it greater than 30 years. I'll just leave it at that. And I've been told all along in these gaps of 4 or 5 years, 10 years, I'm telling you, technology is going to do it for the mortgage industry. I remember when DU was introduced. That's how old I am. Okay. And we're not going to need underwriters. It's just going to speed the process up. I don't know. We're 30 years later and we're still sitting at the same place we were.
Yeah.
So the problem is that with the agencies, the regulations, and all of the things involved, the only place I've seen technology really aid us is in the back end, right? It's really helped us in the back end, from post-closing, to closing, to all the things that can happen in the back end. The front end, everybody else outside of our industry is handcuffing us. And so the process is still the same as it was basically 30 years ago, except we don't have to handwrite an application, right? And we don't have to pick the phone up and order an appraisal. It's all done through the LOS. So there have been some definite things picked up in that phase of it. But I often, if you look at 2020, I don't know that anybody really has sat back and really realized what the mortgage industry did in 2020. It was amazing. The amount of closings that they did was amazing to me, that some of these companies could actually gotten to those loans and gotten them to the table. So I find that our industry is incredibly resourceful. I think the people who are running these companies are amazing guys to get it done. The people that work for the industry just get it done. They just do it. And, hopefully we'll have another year like 2020. I think it's a little far off, but I think the mortgage industry proved that they can do it. 2020 proves that all of the people, they did an amazing job at getting all those loans closed. So again, I think from the purchase perspective, I think we need to improve that commitment process faster. And there's some technology that I know of that people are working on that could actually help that. So, that'll be interesting to see if that happens. I hope it does. But
what kind of technology?
But Fannie and Freddie tried to roll out the bank statements and the thing, and that was cool. But as you know, a very low percentage of the borrowers were willing to sign for you to do that. So we've got to figure out a way to do that, right? It's the age old that all fires start at application, And by the time we get to closing, they're raging forest fires. So we also need to do a better job at holding accountability to guys like me, the sales guy up front, right? I used to watch, there was a gentleman that worked for us, Andy, who did an application that was, oh my God, it was unbelievably great, and wrote a little cover letter on top of it explaining the borrowers.
Oh, wow.
Well, sure enough, his loans flew through the system.
Yep.
And everybody loved working on his loans. We need to do a little better job of that too, of educating and training, and maybe even giving incentives for the guy who turns in that perfect application. I don't know. I mean, I'm not right on the mortgage origination side anymore, so I don't know. But I think there has to be something to improve that also.
Yep. Yeah. And I mean, because listen, that knowing actually you're setting the expectations up front, I think actually improves your overall just reputation. Because if you look at Yelp, if you look at actually, Google reviews, in many cases, a lot of actually the negative feedback comes from people actually who didn't get improved. And, and it's like they didn't get the kind of communications that they would have hoped to have gotten, whether the deal went through or didn't go through. And I think actually, preparing that file properly, means actually you're diligently knowing actually your guidelines, knowing actually what's going to fly, what's not going to fly. So you're improving actually the flow through in your company and creating a better experience, whether it's good news or bad news for your borrower.
Yeah, I mean, when you're working on sales, right? The guy who trained me said, I used to get real discouraged when I first started, right? I'd go out there and knock on a realtor's door and they'd throw me out, rough up my rate sheet and crumble it and throw it at me, that kind of thing back then. And I'd get real discouraged, and he'd say to me, no, you have to go out and get 7 more of those. Because the idea is you get 9 no's and you get 1 yes. So you got to get those 9 no's as fast as you can to get that yes. So it's kind of basically the same idea.
Yep, and that's your game. Actually, is not. Don't focus on how many applications, because you can't control that, but you can control how many no's you get, how many times you get told to pound sand.
Right.
And that's I like that strategy. So, Bruno, listen, this has been great to spend some time with you. But but before we wrap up, I want to know, what are you excited about for the future of the mortgage business?
As I said about 2020, I'm excited to know that we can do that as an industry.
Yeah.
I would say before 2020, people would have doubted that we could have processed that amount of volume through the system. So I'm excited to know that we can do that the industry can do that. I'm excited about the new things that are coming up, and just I look at Incenter, a product we created, Real Search. We can give you a search within an hour. That's a new product that we developed. That speeds the process up, right? So there's a lot of exciting things around that. I don't, I think that just the idea that I think my thing would be, I want to be alive. And the whole time I'm alive, I want to make sure we still have loan officers. Because when I read that we're going to displace loan officers with online applications, I chuckle. Because the idea behind, I read a Fannie Mae survey about 2.5 years ago that said the online applications, and I would say our audience here would never guess this, the age group that does more online applications than any age group is from 58 to 64.
Oh, yeah.
Okay.
Oh, no.
The millennials who they're creating this technology for are not using the technology because they don't understand the process. They need someone to explain it. We need to be advisors and not order takers. And I think that's going to be the key. And I'm excited about, I really want to get more young people involved in our industry. The average age of a loan officer, 59 years old, is scary. And I really would love to get more young people excited about this, because look, the reality is, if you just want to do it in dollars and cents, you can't make any more money in any other industry than in this industry
Yeah.
if you work hard. There's no other industry you can make this kind of money.
It's the fastest path to have a six-figure income, and then to do many multiples of that, doing something that's just so rewarding, and it is a great thing. And listen, I know you said actually, you kind of almost put down the work we do, but I mean, we're creating wealth. The services that you provide allow mortgage bankers to put more of their product out there, put more borrowers in homes, and we do have actually a major impact. And let's call a spade a spade. We have been, the one bright spot actually in the economy, during this entire time, since the pandemic hit. So, Bruno, great to spend time with you. Great to understand your story, learn a little bit about what you've done there at Incenter, and a little bit about your career. And I appreciate you taking the time to spend with us.
No, thank you very much. It was a pleasure. It was a pleasure.
All right. And everyone, I'm Andrew Berman. Thank you for joining us for another Mortgage Leadership Outlook. We will see you guys later on this month.